Hey, it's Mack with PriceActionTradingSystem.com, and this is Monday. It is November the 30th. This is the last day of the trading of the November trading month, and so hopefully you've had a good month. If you hadn't, just keep trading, keep getting screen time, keep studying your charts. But I definitely suggest you do it on the simulator. People always try to go live way too quick, and most of you know my thoughts on that now. You're better off to get on the simulator. You gotta get the screen time and the experience watching prices print to a chart, and it takes a long time to do that. So, um, but at the same time, the way you really get better is not by sitting here trading every day. It's by trading and then studying your trades afterwards. And I can't say that enough, is that trading alone does not make you better. You got to sit down at the end of the day and study this chart, study all your trades. The ones that failed, study them until you figure out why they failed. The ones that worked, figure out why they worked. Make sure you understand it. And as you do that every day and you continue to get more screen time and more experience, you will continue to get better. But anyway, welcome back from the Thanksgiving holiday. It was a pretty good first day back. Hopefully the rest of the week will continue. For the most part, this is just a range day. You can see we've had a pretty good rally since the market closed. This line here was the afternoon close, and so this is the overnight stuff. There was a little bit of a gap on here. Here's where we closed, and we opened around 8:30 somewhere in here. So there was a little bit of a gap to 20.90.50, and you see we hadn't quite filled that yet. And my guess is that's where we're headed at a minimum. We could go higher, but at a minimum, I'm guessing they're trying to fill that gap. Because those gaps usually fill pretty quickly. But again, this was just a range day. Generally on a range day, what you'll notice is the range will be within your overnight highs and overnight lows. And you can see, but today it wasn't like that. We found our highs around 20.88 and our lows around 20.78.50 or 75 or so. So basically about a 10-point range. There's some pretty good moves within here. But notice once we broke lower, if you just measured this top part of the range, you can see right there. And guess what? We got a perfect measured move down. You can see that right there. It's a perfect measured move. And so that's how I would have been looking for prices to bounce right in there. And guess what? They bounced to the tick. So pretty easy to do. But anyway, there were a lot of shorts. We had a downward bias really for most of the day, really all day. It looked like we were going to reverse here, but once we turned down, so there's two longs here and everything else is to the downside, but it's really kind of a downward bias. And 2 o'clock came right in here, so this is just all noise right in here. But this would have given you a nice place to plant a target to on the way down, and I'd look to exit right there. So, but let's talk about the trades. We'll back out a little bit, make it a little bigger so it's easier to see, and we'll go from here. When I came in, we were trending up. We had a break and couple legs up to a new high. It was kind of tempting to go long. There's a failed second entry short here, but this was too early. This was before 7 a.m. If you were here, that'd be a nice trade to take. That's a reversal pattern. It would have worked for a scalp, but it was tempting right here when it turned and went back up and broke out. But it's too far away from the EMA. And we've already had a break and 2 legs up now, so I don't recommend going long. Instead, when we turned down and made that little double bar matching high, double top there, and gave you a little net bearish bar, I like riding that back to the EMA. And it did kind of bounce and create a little trap there and turn back down. So I like adding on right there. If you weren't in here, definitely get in here. And I like adding on here, to be honest. And then you get a little second entry short here. This is a little 2-legged pullback. Notice that this channel is not very big. This is more congestion here than anything. Look how flat the EMA is right there. All these bars stacking up. Normally I would say you'd probably want to skip this, but it confirms the trend line, and the trend line is what's holding it. And it's a failed second entry long. Notice the new high, pullback first entry, pullback second entry. So if it turns down here, it's probably going to push down pretty quickly and strongly because it's going to, all these longs are going to exit, and plus there's probably some trapped longs right here. Um, Hopefully you understand why you don't go long right there. You know, that's what'll get me. People will come back and say, why didn't you go long there? Well, you've already had your break of your trend and 2 legs up, and it looks like prices are going to reverse now. So you don't want to be going long right there. But when that second entry long fails, that's a great place. It's a great trap. And of course, if you look for a measured leg, there's your first leg, there's your second. So you're going to, you know, you're looking for prices to at least come to here before they bounce. And then notice what happens. You get another little two. This is very similar to this, except it's not as much overlap. It's actually still a little congestion area, but there's a double top here and a little failed break higher. This is the first break of this trend line, and look how bearish that bar is. And on a smaller scale, counting from your lows, that's a second entry short. So just go short right there. And then it pulls back, and you get a failed second entry long. Notice that's a new swing high. It's higher than that one. So the count starts over, pull back first entry, pull back second entry. So that's a failed second entry long, a very bearish bar. And you figure prices are probably coming down to here. And at the very least, you may get a 2 legs down to a new low. There's leg 1, and so there's leg 2. And where does it put you? Right down there near these previous lows. It takes another push down to get there, but we do get there. So I like entering there. And then you get another second entry short right here with a nice bearish bar. It doesn't break lower here, but then it pushes up and you get that little trap and it turns back down. I like just going short with a stop there, figuring that we're probably going to test these lows, and that's exactly where it goes. There's a little bit of overlap there, but the fact that you got a little double top and you got that one little tick higher, this is a fairly bearish bar. You might have let it break lower and dropped a limit order, maybe a tick or so back in that. Anything more than a tick, you probably wouldn't have got filled. But there's enough room to get out regardless, especially to down here. Turns out to be a good trade, and then guess what? It bounces. And look how it pushes right on through that EMA, pulls back. You get a first entry, then a second entry. This is really tempting to go long right here. But let me tell you why you don't go long right there. First of all, that's flat. Look at all that overlap, and you got a doji in there. So anything 3 or more bars that are overlapping that are stacked side by side, one of them's a doji, that's congestion. And congestion is basically just a very small trading range. But the reason I didn't like going long there was you've got a double top right here. Now you got a triple top and a wider double top. If we'd have pushed higher and then pulled back, that's fine. But the fact that we got that all that resistance right there, you're going long right into that resistance. And like you would expect, guess what? It breaks higher on a second entry and fails. So you get a failed second entry long. I like going short there. And quick, easy scalp, and then it comes back. You really could have gone short here, but it started stacking up. Again, notice that. You got 3 or 4 bars, so there's a chance it'll break lower and turn back, and it does. It breaks lower, turns back, and then turns down. So I like going short right there below that big bearish bar, figuring it's going to come back to the low again. And that's exactly where it goes. And then I was thinking maybe getting long right here, but notice this ends as a doji. This next one before it breaks higher, and then it's a doji, so it's just kind of flat. But when you get that failed second push up, there's actually a failed second entry long there, but it's a little bit flat, so, but it's still a failed second entry long, so you could go short there, and that's the reason that one's green. There's not much room to the lows. The overnight lows are maybe only a tick further, so it's a little bit iffy right there. But when it pushes lower here and pulls back, that's a breakout pullback short. Plus, you get another failed break higher, so you got a failed second counting from this swing. There's 2. That's a double test of this. What was support now acting as resistance. So, and if you try to measure this leg down, and we push lower and get another measured leg down, plus just the measurement of this, that puts prices all the way down to here. So that's what you're looking for prices to try to do. And so I like that one for sure. This one's a little bit aggressive. I'd probably wait on this one. But if you did take this one and you get this other opportunity, I don't have any problem adding on there really. Um, but notice what happens. It doesn't go very far. It's going to pull back and test this again. Got a new low, pull back first entry, pull back second entry that fails. I like going long there. Plus, look at that trend line working up through there, and it gets confirmed right here. Quick, easy scalp, and then it pulls back. You get a break of this trend line here, but you get a second entry long. And normally I'd say you'd skip that second entry long, but it's also a failed second entry short. Notice that swing low there. It tries to go lower once, and then it tries to go lower twice, and you don't want to go short right there. Simply because there's a double bottom here and there's another low right here. Just sit tight and see what happens, and it does give you that trap, so I like going long on the trap. And you can tell it trapped people by how quickly it shot up there, and how strongly. And it's tempting to go long right here, but you've got a break already and a new high. And again, you got a lot of overlap and stuff stacking up, and a doji in there, a couple of dojis. So I think you just got to skip that one. But now that you got a break in two legs up, and look where you find it turning down again. Second entry short, right off that resistance. Nice bearish bar. Go short right there. Then it pulls back. It's tempting to go short right there. But there, again, there's a lot of overlap, a lot of stacking up. But when it tries to come back again and then again, and it gives you this big bearish bar, I'm okay with that one. I treated this like a failed second entry long, basically. You got two measured legs down. It never broke higher, but when it broke lower here, I like dropping a limit order, maybe right there, maybe a tick back, and you would have gotten filled here. It's questionable if you'd gotten filled a tick back into that bar, but then it just drops on through. And again, you're looking for prices to come down here. This is really close here. This one probably, the fact that it didn't break higher on this chart, it probably should be green because it's a little more advanced trade. I'm going to go ahead and mark that one green, change it to green. And then guess where it finds support? Right there at the previous low. It pulls back and ends up going lower. You actually get a little breakout pull back short, but you can't go short right there. You've already overshot this channel. And maybe it's a two-tiered channel, but I'm not going to take that chance there. I just think you're better off to hopefully you're still maybe riding one of these. If you went short here, you're still riding a runner. So I don't think you want to risk adding on with all that congestion right there. And notice what happens. It bounces right off that low. And that's it. And actually this is into the 2 o'clock hour. That's the main reason that you don't want to do anything from here on. If this wasn't 2 o'clock, I'd definitely like taking that long right there. On an aggressive trade, it broke lower first and then turned. And the only reason I say aggressive because there's no break of this trend line. This is the first break. So, but again, you really should have rode this right into the 2 o'clock hour and called it a day. Most of you know, but should know that, I don't recommend trading after 2 o'clock. So again, it was a pretty good day. Early on, there were a lot of shorts here. This was pretty obvious. If you didn't see this, study this chart. I mean, once you see that resistance over and over and over, it's almost a sure thing every time it comes back to it if you get a setup there with it. And we did just every time there almost. So, again, pretty good trading day early on especially. I mean, you could have been done by 9 or 10 o'clock today if you're paying attention and if you start at 7, that is. So really good trading day. Again, it's just a trading range. Nice two-tiered range here, basically. Notice we didn't quite fill that gap yet. It's this black line. We missed it by a tick or two. I'm assuming that's what they're trying to do, fill that gap. But we'll see. Find out tomorrow when we come in. We'll see if it went higher, if it filled the gap and turned back down. But yeah, good trading day, just a trading range. You can tell when it starts swinging both sides of the EMA, you can trade it both ways generally then. But the bias really was down until really until right in here. Then it was more neutral. But most of your trades were all down, so it didn't matter anyway. Um, but that's pretty much it. I'm going to wrap it up for today. We'll have a regular week this week. Hopefully, we'll continue to get some movement and some volume now that we've had the holiday pass us. I hope everybody had a great holiday break as well. If you traded, I didn't even look to see what the. Let's just go back and look. You can see not much happening there. I mean, there's opportunity to take some trades here, but not much going on. Previous day, not much difference. You don't want to see. This is what you don't want to get stuck in this stuff. That's why I say take the days off. I mean, there's just if you get stuck in here and and you can't get out, and then you got to exit it. This day there was nothing. This was that Thanksgiving Day, 26th? Yeah, that was Thanksgiving Day. Nothing happened that day. You definitely don't. I mean, it went up, but there's no entries. There's no way to really. I mean, who wants to sit there for 4 hours and look at that? And then Friday there was a little more movement, but still not much happening. There's a couple of setups here. So that's why I take those days off. It's not worth fooling with. It's not worth the risk of getting trapped and getting stuck in a trade and just having to watch it for like watching paint dry or whatever. It's the way I always describe it. Nobody wants to sit there and watch paint dry. So anyway, welcome back. We'll be back again to do this again tomorrow, but I'm going to wrap it up for today. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.